Let's look at oil and gas. First off, read this disclaimer carefully. We will look at one of the key sectors, and that's certainly the energy sector, the oil and gas, ETF, the XOP, distance from 52-week low and high. We will also look at some leveraged alternatives, okay? We have this one, which is the GUSH, which is 2x bullish, leveraged, up 192% from the lows, which is pretty decent. And you also here have the bearish option, the minus 2x, oil and gas, which also is up. Okay. This one, and this one. Let's first look at the seasonality here of the XOP. Okay, this is quite a few years, and you can see that, we are currently in August, which is one of the more mediocre months. However, September is in the top 3 all time, so 64% of the months, the XOP closes higher than it opened in September. That's interesting. Okay, let's compare it against the S&P 500, like this. And if we look at a bunch of years, you can see here again that 64% of the time the XOP outperforms the S&P 500. It's not like a super high percent. It is somewhat above 50-50, but it is decent. It certainly is that April and September are some of the best months for the XOP. Okay, so let's look here at the charts. Let's look at the long-term picture here for the XOP. So this is all the history we have. Quite clearly, this entire industry is in a massive downtrend. The forces arrayed against oil and gas are tremendous, and they are growing in power. Hence, the long-term picture for XOP is simply bearish, especially if you look like multiple years, like 5+ years, decades into the future. It's very difficult to become bullish on oil and gas. That does not mean that there's not going to be fantastic trading opportunities. We saw that the GUSH ETF had some pretty decent gains. XOP is also seeing some rally from the lows, so if we do zoom in a bit here, do some measurement. So if you measure from this intra-week low, like there, to this intra-week high here, that's 134% in a very short time. So there are definitive opportunities. From a charting perspective, we do see some massive cycles here. You could make the case that the current declining cycle, well, this declining cycle right here, if you measure it in the number of months. So let's measure it from here. Then as far as, it was 623 days. Let's look at this downtrend here, 616 days. Hence, you could make the case that this current downtrend is getting long in the tooth. Okay, so hence we, just for the sake of mean reversion and the general dynamics of the markets, now with some tug and pull between the bulls and the bears, we would expect there to be, some pushback here from the bulls. We are seeing some of that. The question is this the beginning of a rising cycle here after this massive protracted downtrend? If you look here at the RSI, the RSI literally reached a record low here. So from purely like oversold perspective, we would expect the buyers to step in. They did. If you look at the accumulation distribution line, there was heavy selling pressure, for sure. There's been certainly a bit of a pickup, but some pullback here as well. Hence, the accumulation distribution is not really, there's not like a tremendous amount of, there's not an impressive amount of buying power. We're not seeing that yet, which is understandable given the fall and also the long-term outlook. Looking at the correlation here with S&P 500, it is minus 44%. So they are negatively correlated. Then that's interesting, but the negative correlation is because also this one has been massively underperforming. Okay, so let's now let's first analyze the XOP, and then we will look more at the leveraged options. Okay. Here we have some wonky data here. That's unfortunate. What's interesting here, from a charting perspective, is that we are seeing this rounding-ish bottom formation. This is a rounding bottom that's taken how many days? 58 days in development. So the logic, behind the rounding bottom is that here you have the dominance of sellers, and then there is equilibrium reached, and then the leverage goes over to the bulls. The nice thing about the rounding bottom is that because it takes multiple days or weeks for it to form, or months, or even years, in the longer time it takes, the higher the probability is that the more recent low is the low, at least for some time. Because ever since this day here, there's been more buyers than sellers. We have basically been, well, price has been going up. That's the thing. So towards the close of the day, at least, the bulls have been winning out. We are also here testing this, well, we're slightly actually, we are challenging it here, this 50-day moving average. To be able to break out above it would, fuel the bullish sentiment. So there are some reasons here to become, a bit skeptically, but cautiously optimistically bullish here about the XOP, at least from a trading perspective. There could be some profits here being a bull. Look here at the daily accumulation distribution. We are seeing, there are buyers behind this move. So there's some corroboration there. Also some corroboration here from the RSI. Okay, so hence if I were to have a take here on the XOP, looking at it for the coming months, I would be highly skeptically bullish from a purely trading perspective, looking at sector rotations, dips being bought, basically this might have been a bit too excessive in one direction. But to be perfectly clear, long term, I find it extremely difficult to become bullish on this industry. Okay, so let's now look a bit at, the leveraged ways to trade this, okay? So now we will have the XOP here in the background. Then we will have a GUSH, like this. So this is the one if you are bullish. Looking at the weekly data points here, there's 93% positive correlation. That's decent. There is some tracking error, but 93% it's okay. If you look here at the daily data points, there's a 91% positive correlation, and given that this one is bullish to X, we expect a positive correlation with the XOP. So it works. It works as a way to trade it, but there is clearly some meaningful divergence. Let's look at the drip. So let's say that you are a bear. So you're bearish on oil and gas. This is a way to trade it. Looking at the weeklies here, there's a minus 20% correlation. That's a very bad correlation. That's very bad. So from the weeklies, this is not what we want to see. We ideally want to see at least minus 90% negative. At least. And looking at the daily data points, there could certainly be some data issues here on investing.com. They are terrible at updating data after a stock split, any kind of split really. Hence, let's take this with a grain of salt. But yeah. So if you are bullish, want to be leveraged, the drip is an option. No, okay. If you are bearish, then the drip is an option. If you are bullish, then the GUSH is an option. But then again, because the XOP is so liquid, there are leverage ways to play that ETF in the derivative options market, meaning real options. Okay. Given the wonky data we had there from both GUSH and DRIP, I would think that the options market is probably the best way to get leveraged exposure here to XOP. If we go here to Finviz, you can see that year to date, pretty deep in the red, which makes sense given the fall we saw. And here you can see it is optionable and shortable. The dividend is quite juicy, actually at 2.6%. So that's another, argument to maybe have some position here. Saks.com is not feeling any love whatsoever for XOP. They have a number 5 strong sell, but you could also make the case that maybe there's such an overwhelming bearishness priced into the XOP that it can't get worse than 5. So if there's an upgrade from Saks, that could be bullish. If you look at XOP here from ETF.com database, let's look at some dividend and valuation. Here are some valuation data. So the PXJ minus 23, what is that? It's the Dynamic Oil and Gas Services ETF. The XLE is the classic, the energy ETF. That one has a PE of 54, so the PE of XOP is certainly better from that perspective, though the XLE is far broader in scope. Let's look at dividend alternatives. Well, we do know what XLE is. You can see here that the XLE dividend at the current levels is really, really good, 14%. That's seriously good. The OHH, it's the oil services, for much far worse dividend. Interesting. Okay. Let's look at the fund flows. What's been happening over the last 6 months? Is there some general trend here? I mean, here you can see that there's this more overwhelming bearish bias. Here we have this capitulation phase, but you see that there's been a bit of a change. There's been a bullish shift, so that's interesting. And this is the actual fund flows. Yeah. So all in all, to sum up my take, speculatively bullish on the XOP. For the intermediate time frame, long term, I cannot help myself to become extremely bearish, and I think that the future is in clean, ecological energy, especially solar. But I also am interested in, I'm optimistic about nuclear energy, and but I'm not a fan of wind energy because there's a lot of complaints. The environmental organizations are really actually going against wind energy because animals don't like them, like birds, basically any kind of animal, they don't like it because of the noise, and they also are hit with it by the fans. From a purely scientific standpoint, there are just limits to how much you can get out of wind. But when it comes to the sun, there's this extreme amount of sun energy that hits our planet every second, every time, and for the very foreseeable future. And the current solar energy panels are inefficient, and that actually is bullish because that means that even though they are good today, they will get much better in the future. So yeah, I like solar. Okay, so let's look at some other. Let's have a bit of a chart frenzy. So let's look at Amazon as an example. So Amazon, it's been extremely bullish, but there is some sign here of fatigue. I mean, we do just expect a correction just from the perspective of literally all of the history of Amazon. It just has corrections every now and then. It just is the way the stock trades. Let's look at some other companies. Let's look at Twitter. Twitter is an interesting one. Yeah. Certainly in this up phase, the issue with the Twitter stock, as you can see, is that it moves in cycles, and when it has pullbacks, it has a very big pullback. That also means that it is very good for swing trading. Let's look at Snap. Well, Snap is Snap, like that. What is Snap's chat? Snap Inc. Okay, Snap Inc. Okay, a bit late to the party here, but you can see that there was an inverse head and shoulders pattern, shoulder, head, shoulder, major breakout, but kind of like the gains have been made. It usually has these deep pullbacks, meaning that there could be more selling left in this one. Though after a major pattern from confirmation, there usually is some sustainability of the major trend change, which it was from bearish not to bullish. Okay, whatever you do, of course, let the trend be your friend and may the trend be with you.